Today, we're diving into a topic that has the global financial community buzzing. We're talking about the movements of two currencies that have long been at the center of investor conversations, the Iraqi Dinar (IQD) and the Vietnamese Dong (VND). For years, both have been subject to speculation, but now, a new chapter seems to be unfolding, with live market data suggesting a possible shift. The signals appearing on Forex charts are drawing significant attention, hinting at a potential change in valuation that few analysts had anticipated would happen so quickly. This is a broadcast for everyone who has been watching and waiting, and for those who want to understand the dynamics at play. The foreign exchange markets are widely recognized as a bellwether for currency health, and their current activity regarding the Dinar and Dong is particularly noteworthy. We're seeing charts and technical indicators that are being described by some analysts as unprecedented. The Iraqi dinar, in particular, a currency often seen as having a suppressed value due to its history of artificial exchange arrangements, is now displaying what some interpret as a bullish reversal pattern. This is a dramatic departure from its typical trading behavior and is catching the attention of seasoned traders across the world. Looking closer at the technical data, we can see why there's so much excitement. The charts for the Iraqi dinar show classic bullish patterns. We're seeing strong candlestick formations that suggest a zone of accumulation, where the currency is being bought up, and a breakout above key resistance lines that have held firm for months. This is happening with trading volumes that seem to confirm the strength of this upward movement. The moving average convergence divergence (MACD) indicator has also turned positive, which many traders see as a powerful sign that the trend has shifted decisively. It's not just the Iraqi dinar that's showing these signs. The Vietnamese Dong, which has also been subject to tight government control and capital restrictions, is likewise signaling newfound strength. After a period of sideways consolidation, where its value traded within a narrow band, the Dong has now broken upward. The Relative Strength Index (RSI), a tool used by traders to measure the speed and change of price movements, is pointing to growing strength and sustained buying pressure. This combination of signals for both currencies is prompting a reassessment of long-held assumptions. The movements we're witnessing are significant, because bullish trends in Forex markets are rarely random occurrences. They are often tied to deeper, underlying factors. Analysts believe these moves could be linked to strong economic fundamentals, institutional anticipation of upcoming policy changes, or even insider knowledge of major macroeconomic shifts. This raises a crucial question that is now a central part of conversations among traders and analysts everywhere. What exactly is fueling this sudden surge in both currencies? The reaction across global financial centers has been swift and palpable. As information about these bullish chart patterns spreads, traders in cities like London, New York, and Dubai are reportedly adjusting their long-held views about these currencies. Hedge funds that once ignored these frontier currencies because they were considered too illiquid or politically constrained are now running new simulations. They're exploring scenarios that factor in the possibility of a significant revaluation or a shift to a managed float system. It seems the conversation has moved from a simple if to a more pressing when. Private investors, often known for their flexibility and quick decision-making, are also a key part of this narrative. They have reportedly begun exploring strategies to diversify their holdings into the Iraqi dinar and Vietnamese Dong, aiming to position themselves before larger institutional players enter the market with more significant capital. Even Tier 1 banking analysts, who are typically cautious and stick to established forecasts, are quietly updating their client advisories. The language they are using reflects a notable change in sentiment, with one London trader reportedly calling the dinar chart a once-in-a-generation opportunity. The shift in sentiment is not merely anecdotal. In Dubai, for example, investor groups are reportedly already reallocating funds into these currencies, a tangible sign of their willingness to act on these new signals. This early positioning by capital is still largely under the radar of mainstream financial news, but it points to a larger, emerging trend. The narrative has moved beyond simple speculation. It is now about a growing belief that these currencies are at a crucial inflection point, where market technicals, geopolitical currents, and institutional behaviors are all aligning in a way that hasn't been seen for years. To understand the substance behind the charts, we turn to three experts. From Iraq, a respected economist, Samir Al-Hassan, points to the country's record-high oil revenues. He argues that this gives the Central Bank of Iraq a strong financial position, with sufficient reserves to support a stronger currency and withstand any potential volatility. In his view, the Forex markets are simply anticipating an official policy change that is likely on the horizon. This provides a strong fundamental basis for the dinar's recent activity. Meanwhile, from Vietnam, market analyst Lena Tran highlights her country's booming manufacturing exports and its growing status as a global supply chain hub. She notes that Vietnam's economic fundamentals are robust, a fact that has been acknowledged by organizations like the International Monetary Fund, IMF, for its fiscal stability. Tran suggests that the Vietnamese Dong is fundamentally undervalued by a significant margin, possibly as much as 30 to 40%. This economic strength provides a powerful, fundamental reason for the Dong's recent positive chart behavior. Adding a third perspective from the United States, investment strategist David Klein observes that Western banks may already be laying the groundwork for currency exchanges. He mentions that private placements and so-called Tier 4B exchanges are reportedly testing the waters behind the scenes. Klein likens the current bullish chart action to a smoke signal before the fire, suggesting that what the public is seeing now may only be the initial stages of a much larger, more visible currency realignment. These three expert voices collectively suggest that the recent movements in both currencies are not just speculative noise, but rather early indications of a potential structural shift in the global financial landscape. Beyond the visible charts and expert opinions, there is a quieter, more confidential stream of information circulating. Several banking documents have reportedly surfaced, referencing test updates to internal currency screens within major financial institutions in the United States. These updates are said to include placeholders for both the Iraqi Dinar and the Vietnamese Dong. While these rates are not yet live or publicly tradable historically, such placeholders often precede a live adjustment in official banking systems. This suggests that the operational frameworks for a change are already being quietly put into place. Insiders familiar with these developments describe a methodical process. They explain that the banking sector typically does not invest the time and resources into creating trial configurations, unless there is an expectation of a larger policy rollout. An analogy often used to describe this scenario is that of a person walking into a local bank and suddenly seeing a screen that lists the dinar at a significantly different rate or the dong at a new, higher value. This scenario is no longer considered hypothetical, but rather a matter of when, according to those with knowledge of these internal processes. The sensitivity of this information is why it remains unconfirmed in the public domain, yet its circulation is enough to spark considerable anticipation. The movements in the Iraqi Dinar and Vietnamese Dong are also supported by classic technical analysis, formations that experienced traders recognize instantly. For the Iraqi Dinar, the charts are reportedly showing a clear, double bottom pattern, which is a powerful reversal signal that often appears after a long period of decline. More significantly, the currency has broken above a key resistance level, a ceiling that had previously prevented upward movement, with trading volumes confirming the strength of this breakout. These are not random fluctuations, but rather textbook signals that a trend may be in the process of reversing. Similarly, the Vietnamese Dong has its own set of compelling technical signals. After a period of trading sideways within a tight range, it has now broken upward. The Relative Strength Index, RSI, a momentum oscillator, is pointing to increased strength and sustained buying pressure. The simultaneous appearance of these textbook bullish indicators across various major charting platforms is not being viewed as a mere coincidence. Instead, it is fueling speculation that this could be the beginning of a prolonged bullish phase for both currencies, driven by the fundamentals of market behavior and technical data. A parallel and equally significant story is reportedly unfolding within the walls of major financial institutions. Memos have been circulated within some of the largest commercial banks in the United States, including Chase, Wells Fargo, and HSBC. These memos are said to hint at upcoming developments concerning the Iraqi Dinar and Vietnamese Dong. Regional managers have reportedly been advised to prepare their staff for potential rate changes that could be rolled out on short notice. This kind of customer preparation protocol is highly unusual and suggests that banks are proactively bracing for a change that would directly impact their customer-facing exchange services on a global scale. The pressure from international financial bodies is also a key factor. Organizations like the World Bank and the International Monetary Fund are reportedly urging both Iraq and Vietnam to modernize their currency frameworks. They argue that the outdated exchange mechanisms no longer accurately reflect the strong economic realities of their respective nations. For Iraq, its immense oil revenues make the case for a stronger, more credible dinar undeniable. For Vietnam, its booming manufacturing and export sectors position the dong as a candidate for a regional revaluation. This alignment of banking readiness with international, institutional pressure creates a compelling backdrop where a sudden revaluation becomes not only possible but perhaps inevitable. The movements of these currencies must also be viewed through a strategic lens, as currency behavior rarely exists in isolation from political and economic policy. In Iraq, Prime Minister Mohammed Shia al-Sudani has been increasingly outspoken about his desire for greater financial sovereignty, particularly by reducing the country's dependency on the US dollar. This policy direction is a significant signal to Forex markets, as traders often interpret such moves as a precursor to a potential currency appreciation. It suggests a political commitment to leveraging Iraq's vast oil revenues to build a more resilient financial system. In Vietnam, the government has been meticulously aligning its economic strategies with global trade, focusing on strengthening its export channels and maintaining fiscal discipline. This consistent approach has helped build up robust foreign reserves and has positioned the dong for potential upward mobility. Policymakers have created an environment where a managed revaluation or a shift to a more liberalized exchange rate could be a natural next step. The convergence of these domestic policies with global scrutiny adds weight to the market signals. When traders see a clear political commitment paired with strong economic fundamentals, they are more likely to anticipate and act on potential changes in valuation. For those who have been holding the Iraqi Dinar or Vietnamese Dong, the unfolding developments could represent a crucial moment. After years, and in some cases decades, of waiting while these currencies remain suppressed under strict controls, long-term holders may now be seeing signs that the global market is beginning to recognize the possibility of a significant revaluation. The combination of clear bullish trends on the charts, institutional preparations, international pressure, and policy signals from Baghdad and Hanoi suggests that this is more than just passing speculation. It's a confluence of technical, fundamental, and geopolitical factors aligning in a historically significant way. The implications for those with a long-term perspective are significant. The current environment calls for careful observation, strategic planning, and disciplined positioning. The years of patience and resilience may be rewarded in a way that could redefine the financial landscape for some. Markets are forward-looking, and what appears as a modest upward movement today may be the early stages of a much larger structural change tomorrow. The combination of these factors reminds us that diligent research and a long-term strategy can be a powerful approach when dealing with frontier currencies. As we look at the big picture, three key signs seem to be converging to suggest a potential major shift. The first is the unmistakable bullish trend visible on the Forex charts themselves. Technical indicators like double bottom reversals and resistance line breakouts are not random. They are consistent, measurable patterns being observed on multiple platforms simultaneously. This consistency lends significant credibility to the idea that sustained upward momentum is building. The second sign is the reported updates to internal bank screens. The quiet appearance of internal rate placeholders for both currencies and major financial institutions suggests that preparatory steps are already underway. This is a powerful signal because, historically, when internal systems are updated before public announcements, it often precedes a larger, more visible change. It indicates that the financial machinery is being quietly tested and readied for a larger-scale rollout. Finally, a third intriguing indicator is the institutional silence from key global authorities. Both international bodies and major multilateral organizations, including the IMF and World Bank, have not officially confirmed or denied any speculation about a potential revaluation. To market insiders, this silence is rarely neutral. It is often interpreted as a sign of preparation, a tacit acknowledgement that significant moves are being planned behind closed doors. This suggests a level of careful coordination that adds to the compelling narrative of a potential shift. In closing, the picture is becoming clearer for those tracking the Iraqi Dinar and Vietnamese Dong. The live Forex charts are painting a scenario that many have waited years to see. The bullish momentum is not just visible. It's supported by technical indicators and institutional signals that, while subtle, are increasingly compelling. For everyone watching, the message is to remain informed, stay vigilant, and be prepared. Opportunities in these kinds of frontier currencies are rare, and those who combine patience with careful observation are often the ones best positioned when structural changes occur. The coming weeks may very well define the next chapter for these currencies and those who have been following them.